Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you how to trade PayPal. I'm going to show you two strategies that can be used with PayPal at its current situation right now, but most importantly, I'm going to show you how to generate income using PayPal. Now, if you are new to options trading or you're trying to use options in order to make some additional income to help you supplement your 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be giving you a step-by-step walkthrough of two strategies that can be used with PayPal. In addition to that, I'm going to show you how to generate income using PayPal. Now, there's only three proven ways in which anyone could learn options and be very good at it, and those ways are going to be to practice, practice, practice. That being said, let's go ahead and jump into the advanced feature right here in order for us to go ahead and open up the chart. Now, here we are on PayPal's chart, and we're going to go ahead and open up the 1Y right here, which is going to be representative of the 1 year outlook. Now, at first sight, you're going to see this is a pretty decent chart, and it's similar to what I like to trade, but it does not give you the wow effect. The reason why it does not give you the wow effect is that the 200-day moving average right here is around 71.68, or let's say $72. And the reason you don't get that wow effect is because the current 200-day moving average is only a couple dollars above the current share price. If you look to the top left right here, you're going to see the current share price of PayPal is trading at $69.71. So basically, there's only a $2 difference. So using this chart for the 1 year outlook, it doesn't give you that wow effect. Now, if you do go ahead and go over to the 5-year outlook, then it gives you a better visual of how this stock is trading. So for the last 5 years, PayPal has still been trading under its 200-day moving average, and you can see this long line here. The stock has been absolutely still. So from the 5-year outlook, you get a much better view of the value you would be getting if you decide to get into the stock. Now let's go ahead and go back to the 1 year outlook. Now, going down to the RSI to the bottom, our RSI 50, you're going to see the RSI for PayPal is around 48, close to 50. Now, it's right smack there, right in the middle of the RSI. For those of you guys who do not know, the RSI is a momentum indicator. So what it's trying to tell us now is that any stock that has a 50 RSI and is going down towards the 30 is going into oversold territory. PayPal is not in oversold territory right now. It's still at a very decent level. So based off this chart outlook right now, you don't get a definitive answer of what option strategy you want to do with PayPal. Now, before I go ahead and give you some of the key statistics, let's go ahead and find some kind of support or some kind of resistance for PayPal. So let's go ahead. I'm going to draw my trend line right here. And as you can see right here at the 70-ish price, it has a very strong support and a very strong resistance. Now, the reason why the 70 mark represents a strong support and also a very strong resistance is because if you follow the trend line all the way to the left, you could see that the price has touched that line several times in both direction, up and down. So the 70 mark presents a very strong resistance and also support. Now, if I go down, I'm trying to look for a secondary level of support. I'm going to move my trend line just a bit, and that's going to give me around the $65 mark. So that's going to be a second level of support right there. So $65, we're going to be looking at that. Now, I'm going to go ahead and go back into PayPal. I'm going to give you some key information that can be used before making a decision to trade PayPal. Okay, so here we are on the key statistic of PayPal. Now, one of the most important thing I want to bring to your attention is going to be the PE ratio, or the price per earnings ratio. Currently, PayPal's PE ratio is sitting at 14.57. However, over the past 10 years, PayPal's average PE ratio is at around 41, which means the current PE ratio right now is trading at a 65% lower than what the average of PayPal is. So that right there tells you there's lots and lots of value to be added right here. Now, just going down a step further, as a 52-week low of 55.85. Now, this 52-week low right here shows that the current share price of $69 is way closer to the 52-week low than it is to the 52-week high, which tells us once again there's some upward momentum that can be had. Now, lastly, let's go all the way down to see what the investors are doing. Now, Robinhood investors are kind of selling out of PayPal right now. And if we go over to the hedge funds are buying as well as selling in kind of the same amount. However, if you go to the insiders now, you get a better view. Now, the insiders have been buying up this stock like crazy. So the insiders know something that we do not know. They are in the company, they are management, they're employees, so they have more information than we do. So I tend to follow what insiders are doing more than anything else. Now, the last thing I want to bring to your attention is going to be the analyst ratings. So the analyst ratings is a strong hold. Now they're saying now is not the best time to buy it. Now it's not the best time to sell it, but it'll be a good time to hold. Now, when you go ahead and go to the research report, you could see that the analysts also give this a fair value of $94. The $94 value represents a $24 upside from the current price right now of $69.71. So again, there's value to be added here. Now let's go ahead and get into what we are all here for, which is going to be the options. So to do that, we're going to go to trade PayPal options to the bottom. Now, the first strategy I'm going to be doing with PayPal is going to be what's known as DCA, which is dollar cost average. With the DCA model, all you do is that you buy PayPal on a regular intervals with the exact same amount. So to break it down in the simplest form, you buy $20 of PayPal every single week on the same day. Doesn't matter if the share price is up or the share price is down. What that does, it allows you to build a position in that particular stock, and it gives you an average price, which is going to be the median between the highest price and the lowest price for that certain point in time. Now, full disclosure, I have begun to open a position on PayPal and I am using the DCA method. Now, before we go ahead and get into the option strategy, I want you guys to do yourself two favors. Favor number one, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. Second favor you always want to do yourself. When doing options, always make sure you have an exit strategy. That way, if the trade do decide to go against you, then at least you know how to get out of the trade. Now, lastly, these videos are representative of what I'm doing with my personal portfolio and therefore entertainment and education purposes only. Now, the option strategy I would be doing with PayPal, here goes. I am going to be going to buy. I am going to be going to call. I'm going to go ahead and choose a strike date. The strike date I'm going to use for PayPal is going to be June 21st, 2028, which gives me around 820 days to expiration. The reason I'm going to be going with such a further out expiration date is because although I do believe there's lots of value to be had for PayPal, I still see that this stock could pull back just a bit more. So whether it pulls back more or it goes up from time of making this video, I've given myself enough time in order for this trade to work out in my favor. So now that I have buy and I have call and I have my long dated expiration date, I'm going to proceed to choose my strike price. The strike price I'll be going with is going to be the $65 strike price. And here's my reason for that strike price. So by getting the $65 strike price, I'm putting myself directly at the support level. Now, can the share price go lower than $65? It certainly can. Hence, I gave myself more than enough time so that even if it does go below the strike price I chose, it has enough time to recover. So the $65 strike price it is. Now, there's other prices that are really, really good. The $70 strike price is good as well as the $60 strike price. All three of them are good, but me personally, I'm going to be going with a $65 price. The other reason I'm going to be using the $65 price is because of the delta. It does give me a 0.7 delta, which is the range I usually like to get. Now, the last thing is that the price I'm paying for this, because this is a buy call, it's a buy option strategy, I'm going to have to pay. The amount I'm going to have to pay is going to be $24. Now, $24 for this contract in the real world is going to work out to be $2,400. You're going to simply multiply your $24 right here and you're going to multiply by 100 shares because each option contract does contain 100 shares and that should net you $2,400. The reason why I like the price so much is that the price represents a 30% discount if you had to buy the share price outright. If you were to buy 100 shares of PayPal right now, it would cost you around $6,900, which is going to be $69 per share multiplied by 100 shares. By using this option strategy, which is known as the leaps option strategy, you're now going to be able to control that same 100 shares of PayPal for 30% less of value. Hence, I chose the $65 price where I'm only paying $24. Now, like I mentioned, this option strategy is known as the leaps option strategy. This is one of the favorite and mostly used option strategy in my current portfolio. Now, with this particular leaps option in my portfolio on PayPal, this is my exit strategy. I am going to have this leaps option sit in my portfolio. I'm going to do absolutely nothing. Hence, that's another reason I went all the way out to give myself enough time so I could just have it sit there. The way I'm going to be making money with this leaps option, with this option strategy, is that whenever the share price decides to go up, so too will be my price of my options. So if the share price goes up, right now, let's say it goes up from $69 to $70, then this leaps option is now going to be worth $24.70. Now, how did I get the $24.70? I simply added my delta of 0.7. That's how this works. Every dollar this share price goes up, the option is going to go up by 0.7 or 70 cents. Now, of course, there's a lot more things that goes into it. The other deltas go into it, but that's just the simplest explanation for right now. Now, for those of you that cannot just have an options in your portfolio and do absolutely nothing, there's another option strategy that can be used in order for you to make some income. And for that, you're going to have to take into account the break-even price right here. The break-even right here is going to be the $87 level. Now that we know the $87 level and we have our leaps sitting in our portfolio, now we could go ahead and make some additional income. So let's go ahead. We're going to change the parameters just a tad. I'm going to go now to sell. I'm going to go to call. And now I'm going to be going to choose a different expiration date. And I will be going with the 21st of November, which gives me 29 days to expiration. My reason for using this particular date is that I personally like to do monthly expiration date or every 30 days. So November 21st gives me 29 days, which is almost a perfect month. Now, I'm going to be going ahead. I'm going to be choosing a new strike price, and I'm going to be using the leaps that I just bought in my portfolio in order to make consistent income. So the new strike price I'm going to be using, I'm going to continue going up. Or what I'm looking for in this instance, I'm looking for a price above the $87 right here. Now, the price above the $87 is going to be the $90 level. Now, that right there is going to give us a chance of profit of 95%, meaning if we do decide to go ahead and execute this particular option strategy in order to make additional income, there's a 5% chance that this trade is going to go against you. Now, a 5% chance of losing this trade is a chance that I can take. So at the $90 strike price, a very high chance of profitability of 95%, you're going to get paid. The amount you're going to get paid is going to be 0.27 or $27. Now, me personally, I will not be doing this option strategy. The reason for that is that I don't think the risk to reward is sufficient. So I'm not going to use a leap that I paid $2,400 for in order for me to just get $27 on a monthly basis. I prefer to have the leap sit in my portfolio and do absolutely nothing. But like I said, for those of you who cannot do that, this is an additional way in which you could make income. So what you're going to do, more than likely, there's a 95% chance you're going to win this trade. You're going to lock in your $27, and then you just go ahead and do three things. You rinse this option strategy, you repeat this option strategy, and you keep locking in your investment gains. Now, the exit strategy for your leaps option. Whenever the leaps option, or rather the share price goes up and your entire option is up, then you're going to decide what level of profitability is good for you, and then and only then you're going to close out the trade. For me, for instance, since I'm getting the leaps option when the share price is around $69.71, I'll be looking to exit at any price above the $80 price. So whenever this share price goes to $80, then I'll be considering whether I should get out of the trade then. And that's also going to depend on what the market is giving me at that point in time. So there you have it, investors and future investors. If I were to get into PayPal right now, I'll be doing the DCA method, which is a dollar cost average method. I'm also going to be picking up a leaps option. The leaps option, I'm going to leave it in my portfolio and do absolutely nothing. And my exit is to be whenever the share price appreciates in value. I do not need to wait until expiration date in 2028. Whenever the share price goes up, I could go ahead, I could close out, and I could lock in my investment gains. So full disclosure, I do have both of these options strategies working right now. I am DCAing in PayPal, and I also do have a Leaps option in my portfolio. I'll make a further video later on to show you how this is going, probably a couple months from now. So for those of you who have made it to the end of this video, you guys are the real investors and future investors. If you have not already, now will be a good opportunity for you to go ahead, like the video, subscribe to the channel. Make sure to share this video with someone you think that's struggling to grow a small account portfolio. Together, let's help as many people as we possibly can start generating income with options trading. Now, until the next video, keep pushing your investments.